Wherever you are, be there. That was a challenge for me before the internet, right? Yeah. Being present, that was tough for me. And then, now the internet, and it's just, you can be numb anywhere you want.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Jeremy Voss here on the show. Jeremy, welcome.
Thank you. Great to be here, Neil.
I'm excited you're here. Say for the audience to say, who are you, where are you from, what do you do?
Yeah, my name is Jeremy Voss. I own a company called Exit Factor. We are we're a company that specializes in helping business owners to prepare their company for sale. Now, whether that's a year from now or 10 years from now, it's critical to make that preparation, because you got to understand what the value drivers are for your business. We'll get into all that. The question was, who are you and what do you do? So I'm from Pella originally, lived there all my life, and my wife Jody and I have 4 kids. 2 of them out of the house, 2 of them we're working on yet, and the 2 that are out of the house are both married, and we have 1 grandchild. There I hit the important pieces of who I am and what do I do.
Yeah, that's fantastic. Well, I invited you on the show. We got to meet each other and get to know each other a little bit. And you just struck me as somebody who adds a lot of value to business owners. A lot of business owners, a lot of investors, certainly we're involved with and listen to the show here, are in fact business owners, whether they're in the business of real estate as their primary business or they operate some other business and then obviously producing returns for them. They seek to deploy that capital inside of real estate. So I thought it'd be fun to have a conversation just about business in general, about the things that some of the levers that one should be giving thought to. We talked about this before we jumped on here, is you do a number of assessments, and oftentimes that business owner is focused on one factor or another that is not the most important factor for a buyer when they go to sell their business, whenever that happens to be.
Right. Yeah, that's exactly right. So the beautiful thing about owning your own business, about being an entrepreneur, is that you can go the direction that you want to go. You can do what you want to do. And that's why a lot of people start a business is for freedom, right? That's right. The businesses I've started. That's been exactly it. It's like, okay, I want to do what I like to do or what I know how to do. And I want to do it for myself. And where they wind up is they wind up in what's lovingly called golden handcuffs. Right, where they're working on the things that were important. We talked about this earlier. They're working on the things that were important in the first 6 months or the first year of that business. They're focused on those activities, and we're 10 years in, and they're still doing all of the things that a startup or that someone who's new in business are doing. And things like that are really really dragging down the value of the company, because they don't understand what the owners are or what buyers are actually after when they're looking at purchasing companies.
Well, I mean, heavily they're after, I would imagine, they're looking for a business, not a job.
Yes.
Right. And so there needs to be an owner's box, and the owner needs to sit in that box with certain activities that reflect that box.
Right.
And the idea being, if there are other tasks or responsibilities in the company, they're done by somebody else.
Right.
You can't be totally dependent on an owner.
Yep. Yeah, I can usually tell. You walk in, and within about 5 minutes, you can tell whether or not that company is well positioned, whether or not the owner is the bottleneck. And typically, I will throw out a question and say, so if we decide to work together, how do I get paid? And if it's, oh well, I'll write you a check. That's a big red flag. Not to be negative, but like, okay, so an expense like that can't happen without the owner sitting down, pulling out a checkbook. That's a big indicator that things aren't structured the way that they should be.
The way that they should be.
Yeah. Now, if the owner said, I signed the check, different story.
Yeah. Yeah. Right. How many businesses, if you walked in today, how many businesses are prepared today to sell?
So I'll answer that question by running through some numbers that that are in my head, both from the research that Exit Factor has done, but also just my conversations with business brokers. So to be clear, we don't broker businesses. We don't sell businesses. We are in the business of making sure that companies are well positioned to sell, but we don't sell. But when I talk to brokers, what I hear from them is that about 65 to 75% of their listings never sell. So a broker gets a listing when usually it happens, and we're trying to change this, but usually a broker gets a listing when a business owner has an event that causes them to have that oh shoot moment and say, I got to get out of this thing for whatever reason. And so that's a really that statistic is a really good snapshot of the state of things in general, because typically that event is where a business owner throws up their hands and says, I got to sell this thing. And they think it's like, well, it's like a car, right? I'm done with it. I'm going to throw it on Facebook Marketplace. And so that statistic, that 65-75% that never sells, that tells you about the state of things, right? So 25 to 30% probably have the ability to be positioned. The ones that sell for a premium that everybody would that you want to have as an owner, right? That's in the single digits. The ones that oftentimes the ones that sell, they sell because they're able to pull the price down. The listing's been, it's been a 600-day listing, and now it's just time to get rid of it. And so they will take whatever they can. Sometimes business owners wind up taking less than what it actually costs to shut the business down, right? Because that's not free either.
No.
Stopping business is not free.
Correct.
And so I've seen it and I've heard of it where people don't get enough money to close the business, much less make anything off of 25 or 35 years worth of throwing everything they had into the business.
Iowa, in my mind, is rife with tremendous businesses of various sizes all over the state.
Yeah.
You're focused heavily here in Iowa, or maybe Iowa only.
My previous work has had me all over the country and sometimes all over the world. And my wife and I kind of had this inflection point about a little less than a year ago. I was sitting at Chili's in the Atlanta airport, which, if you know the Atlanta airport, Chili's is kind of the bottom of the barrel, but I was hungry. And I was sitting in this Chili's bar and I got this text that my first grandson had been born. And I was in the middle of a 6-city, 5-day, one of those trips. And I'm like, what am I doing? I need to be in Iowa. I need to focus in Iowa. I need to focus where my kids are, where my grandkids are. So yeah, that was the impetus for us. So yes, definitely focus in Iowa. And something interesting, when you brought that up, it made me think of it. When I was researching starting this company, one of the things I wanted to know was I wanted to just have a really, really firm grasp on what the total addressable market was. So I just wanted to know, okay, because I had like exactly what you said, right? I thought, man, Iowa's chock full of small businesses, chock full of people that could really use this help. But I wanted to dig in and do some research. And what I learned was that I talked to a colleague in this business in Colorado, and from her I got her total addressable market in the state of Colorado, which is about 275,000 businesses. And then I pulled the numbers from the Iowa Secretary of State website, 72,000 in Iowa.
Wow.
They've got a 9 million population. We have a little over 3 million population. Entrepreneurship is alive and well. And it's a big deal here.
Well, I mean, you've got the major cities in and around the state that obviously have the population, but past that, I got to think there is businesses, small towns, small cities across Iowa who may be on generation 2, maybe generation 3, but it doesn't matter where you are geographically. You reach a certain spot where the next generation is not coming in.
Right.
Maybe a little more prevalent in a smaller place, right? Where the kids have gone. And it's a big deal. And you have to find an exit plan because your most likely buyer may not be in town either.
Right.
Talking about most likely buyers, and maybe it's broken down by sales price. Is it a key employee typically? Is it just an outside buyer? Is it a private equity type firm? And maybe certainly the price has an influence in that.
So it's interesting what we've learned, and looking at brokerage data, and when we do exit assessments, we actually pull hundreds of comparable listings, call them comps, right? Just like in real estate.
Mm-hmm.
We can pull hundreds of comps and we get that data of who bought this one, who bought this one, who bought this one. What it boils down to is it's about an 85-15 split. 15% is either private equity or key employee. 85% is outside buyer. So somebody who is sick of the corporate grind or thinks they're sick of the corporate grind and they want to get into business for themselves. That's like 85% of the buyers that are out there that where when you have businesses that are sold through brokers or other intermediaries, yeah, it's about 85%.
Well, they probably come with a track record, some experience. They've been there, done that inside the corporate organization.
Yep.
To some degree. There's significant transferable skill set. They've got some money behind them. And then they have needs, I would imagine, right? They've been in and around for a period of time. They've got income demands. The idea of starting a business versus buying a business is like night and day difference, right?
Absolutely.
The success rate, I would imagine, is significantly higher buying a 20, 30, 40, 50-year-old company.
Yes, absolutely.
Hey, Iowa investors. This is Ava Boutkamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit LegacyImpactInvestors.com to apply.
Yep.
What is an exit assessment? Is it just like what it sounds, or just maybe draw a parallel to real estate, just like a commercial building, having an understanding what that looks like, what factors one should be focused on inside of a commercial building in order to move the needle?
Yep, exactly. So the exit assessment really has two big picture components to it. It has a qualitative and a quantitative component. So the qualitative component is based on the financials. So when we do an exit assessment, the first thing we do is we get 4 years worth of financials. We get them as unadulterated as possible, right? Because we want to see what they look like inside the accounting system. And we look for P&L, balance sheet. Sometimes if it's available, we'll take an income statement, but usually P&L, balance sheet will tell us what we need to know. And we do that, and we do what a business broker, we do a similar service to what a business broker would do, and we do a recast on that. So we'll go through that line by line, and we'll say, what is this expense actually, and how do we classify this, and what's our real income? What do we need to look at to be able to put this business in the correct category for how it's going to sell and who that likely buyer might be. So we work through the qualitative part. That's relatively straightforward as long as you have a good understanding of how business finances work and you have a good understanding of how business owners think, because there's a lot of things that get tucked into business.
Don't want to pay taxes. I'm reading between the lines here. Yeah, that's how they think.
Absolutely right. Absolutely. So I will spend money to not pay taxes. Absolutely. So we walk through that on that side. The other piece of the exit assessment is a qualitative survey, and what we've done is the exit factor team has put together the 60 things that kill business deals. So surveyed thousands and thousands of deals and found that there are about 60 different topics that will kill a deal. So what will happen is you'll have this event, whatever it is that causes you to call a business broker. The business broker will come and look and say, okay, this is, I think, the price we can put on it. They'll put a listing. They get an offer. Everything's starting to look like it might work out. And then due diligence begins. And the buyer brings an accountant whose primary job is M&A. Mergers and acquisitions. Right. And that accountant opens the books and finds 14 holes in those books, and they start poking holes in things, and the whole deal falls apart. Or you wind up with one potential buyer and a huge discount, and then by that time the seller is out of options. Yeah. So I'm getting ahead of myself. So we have these 60 different things that are the deal killers in small business. We have a questionnaire that we step through with the owner of the company. And we will work on those 60 different things. We'll ask those questions. It's kind of like a personality test where you ask a question a different way in different times, right? And the owner will say something, and I'll write that down for later. Then we'll go back to it again. So the other piece of this exit assessment is this complete look at how the company is positioned to sell, which also means how is the company positioned to grow? How is the company positioned to be well behaved and let you sleep at night? Right. And so the exit assessment comes with those two pieces. And then when we've got those two pieces together, then we go out and get our comps and we look at all the comps that have sold. We can choose the range that we use, geographic for sure, but we'll also look at business class and revenue and all of those different things to find things that are in that same general vicinity, right? So we get an idea of what it is that's driving value. So we'll put those comps in, and that comes in a nice table, and then that's how we actually build the value for the company. And so then along with those comps, then we'll print out usually between 5 and 7 example businesses so we can step through that and see what it looks like, what those deals look like. Then the exit assessment also includes an industry specific report. Usually those are 5 to 7 pages, and they have where you should be on all your key metrics. Where should you be on as an HVAC business? Where should you be at cost of goods sold? Where should your gross profit be at? What should your labor costs look like outside of cost of goods sold? All of those things, all of those factors, we're going to come with industry benchmarks and tell you where you should be if you want to get the most value out of the company. So all of that together is usually about 70 pages worth, and it's nicely bound. And then we sit down with the owner. Sometimes it's the owner, sometimes it's the ownership team, right? Maybe mom, dad, and kids. We sit down with them and we present that whole thing. That usually takes a couple of hours to walk through that. What they get out of it, in addition to a good value, like a good number on the value, they also get an idea of where they're at on all of the other things that are going on in their business, those things that drive value. And then we also give them a roadmap. So we give them a 1 and a 3 year roadmap with the assessment that says, here are the things that we think you should focus on in this year and in the next 3 years. And then those piece together, right? So that it drives them to a good goal.
How far in advance of a sale are you doing this type of work, the exit assessments?
Ideally, 10 years.
10 years?
That's ideal.
Wow.
That's ideal because the sooner you start, the more runway you have to deal with issues, right? The more runway you have. I just did an assessment, and I showed this gentleman that he's really been focusing on the wrong piece of his business, right? The business has 2 revenue streams. One of them isn't on purpose. The other is one that he started as a nice to have because there was some demand for it.
Sure.
And now they're about 50-50. And his exit assessment actually had a fork in it because I showed him how what he thinks his primary business is the market value for that is next to nothing because big players are coming in and they're actually forcing people out. They're effectively paying people nothing for their businesses. The other piece that he's looking at as an add-on, as an extra, that one, there are companies that are paying X top line revenue. So a company that does $1 million a year is selling for $2 million, and he had no idea. And how would he? Right? He's
not in the business.
He's not in the business of doing that. He's in the business of doing those two things. So what I showed him was, so right now, if you can flip your revenue, you have, so where he's at right now, he had about $650,000 company, right? So that's about the value we put on it. If he could flip his revenue, that's a $2 million company. But then I also pulled comps from like $5 million deals. Okay. So those weren't in the original comps because that's not his scope today. But I said, okay, now look at a 5, right? So you got 5 million in revenue from this instead of your 1 million. How does 10 million look? And that set the wheels turning, right? Because, okay, now I can go, if that's my goal, I can go beyond my town where I live, and I can start getting into the rest of Iowa. And if we're going that direction, there's just so many more things that make sense. That business is actually easier to grow than the one that he's been looking at as his primary fight. Yeah. So ideally 10 years. It can be as short as 18 months. I'm actually working with one right now that's selling about, let's see, I got done with her assessment in April and she's on the market. What we uncovered for that one was that there were some relatively simple things that she could do, literally sit down with an accountant and fix the last 3 years worth of books.
Sure.
And getting that fixed, that brought cost of goods sold in line with benchmarks or close, right? Benchmark was like 78% and we could get her to 65 or 67,
Sure.
close enough where you're in the game. And not a huge volume business, not a lot of money there, right? I think it's probably going to wind up netting her 120 or 130,000.
Okay.
Some more than she's got in it, and she's going to be able to move on. But having that clarity of why do people buy this kind of business? What are they looking for? And what are they going to have to? What's your buyer going to have to do to prove to their lender that it's going to work?
Well, so many people, I think, have the concept of when it's time to sell, I'll just call a broker or I call the M&A guy.
Yep.
And they are a tool and it's a step in the process.
Yes. And an invaluable step.
No doubt.
I mean, it's absolutely critical.
Yeah.
The better the broker you have, the better your life's going to be.
Correct.
Absolutely.
Yeah. But they're in the business of transacting.
Yes.
Right?
That is
They
right.
can only sell what you've provided them. Can't, and their ability to go back and provide this consultation and do things years in advance, this is not what they do.
No.
They're the best at getting the dollar and cents. You teeing them up for a home run, they're the best at hitting the home run.
Absolutely right.
Yeah.
Absolutely right. And a good broker too they have those negotiating skills to help you get the best deal. They know all about getting a business on the market. They know how to market that business, right? They have the relationships to put your listing in front of a huge audience. Really, so many times people have a rough time wrapping their brain around this, but what you really want as a business seller eventually, whether that's, 10 a year from now or 10, is ideally you want like 10 offers. If you have more than a couple offers, the world's your oyster, because that signifies that you have this ability that it's your choice. It's not the buyer's choice, it's the seller's choice. And so making that a goal, just that in itself, even if you don't have the goal of saying, I want to make $10 million from this business, right? Even saying, I want to have 5 offers when I sell this company. And letting that drive your decision-making process, that's far better than saying, well, or setting a top-line revenue goal, right? So many people do that. Oh, all that matters is top-line revenue. And it's actually not true.
Depends on the business, the industry, right?
It depends. I did do that. Interestingly enough, I did do an assessment for a guy early on who top-line revenue was actually the number one criteria in his industry, second only to gross margin. And this is a high-volume industry. It's one of those businesses where it's just turn. And the likely buyers there are almost all private equity. Right. And all they care about is with the book of business you've built, and can they take your top-line revenue and layer it on top of theirs?
That's right.
That's all they care about. And if as long as you're within the margin range, then they're good and they don't have to do a lot of work. So they'll pay a premium for businesses that fit into that.
Sure.
And so for him, it would be a grave mistake to focus on EBITDA, right? To run a super, super lean company and never take himself out for lunch and never pay himself mileage, right? Seems like it'd be a great idea, but the reality is that it doesn't matter. Yeah. And just as well take that money out and enjoy the ride.
There's some, at least from what I've read, it seems like HVAC has been a hot industry that may align really well with what you just said.
Yep.
And there's a few others out there. Property management, probably another one out there that's getting rolled up. Let's talk about property management a little. When I think about real estate, the brokerage business is like, unless you're in commercial brokerage, maybe one of the national guys. Shy of that, it's a rough go, I suspect, for selling a business.
Yep.
But property management's another story.
Property management is the other side of is the other end of the spectrum. So I was just recently been working through one of these, and I learned that there are property management companies that are selling for 2 times their top level revenue. And what really matters in these deals is the condition of the condition of the real estate obviously matters, but the disposition of the owners of the properties that are being managed. So they want to see good equity position from those owners. And that's actually more important even than like gross margins or anything like that, because these companies are going to buy this business and they're going to layer it on with what they're already doing.
Right. They want to know that what I hear reading between the line there is they really want to have a good understanding that those properties in which are being managed are actually going to stay managed.
Yep.
They're not going to churn. And if the owner of the property management firm also owns probably too big of a share of the property, I suspect that's a conversation that comes in.
Absolutely.
So, a lot of people out there, us included, right? We manage our own stuff. We don't take on third party.
Right.
So there's some out there like that. Incredible. 2-time top line revenue. Yeah, just another one of those industries like you were just speaking about.
Yeah.
Just like the HVAC industry. Top line matters a lot.
Right.
In that business.
Right. Yep. Especially when private equity is involved, right? Because private equity knows they know what their cost structure is. They know what they're going to pay people. The private equity firm has a really good idea of how they hire, how they do all of these things, right? So they look at top line revenue and they're like, well, we can probably increase that because immediately we're going to increase prices. Right. Immediately we're going to improve margin because we're buying from your supplier's supplier.
That's right.
Right. So exactly.
Yeah.
Exactly. Yeah.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Where do business owners, top 1, 2, 3 things or activities they do where they screw it up? Where do they get it wrong?
I'm going to say number one is financials. So having a P&L, a balance sheet, tax return, and bank statements that all match. And that is really simple if you have a good bookkeeper. Yeah. But if you don't have a good bookkeeper, it can be one of the hardest things, and it certainly is difficult to overcome. We work with a couple of really, really good bookkeepers, and I don't get anything from their services, but that can be a lifesaver for a company, just because you really can't make good decisions without good financials. So that is one of the top things that I see everywhere. The other top thing that I see everywhere is owner involvement. And that's a sticky one because most of these companies, the owner has built it. Like the company they've grown up together. Right. In a lot of ways. They've done a lot of things together. It can be like a child to that owner, or maybe even more significant in some instances. But an owner has to understand that they have to extract themselves from the day-to-day operations of that company, unless their only goal is to have a job and to own a job. And that's a really expensive job with a lot of risk, right? A W-2, it's not that hard to make $100,000 a year in a W-2 job and have zero risk.
Right. Yeah.
Right. Go get your CDL.
Yeah. A lot of ways to do it.
There's a lot of ways to do it. So I would say those are probably the top two things that I see where owners are just, and I don't want it to sound like it's a beat down or a negative, because I totally get it. I've been there with my own businesses with both of those things. And but it's also one of those things where owners just have to be really realistic that you can't ignore it, and you can't say, well, we'll deal with that later, or it'll be somebody else's problem, or it'll be the broker's problem.
Sure. Well, just another reason to start earlier, to start with the exit in mind. What are you most excited about this year, 2025?
2025, I am most excited about growing this business, and all of the people that I've gotten to meet and all the people that I'm going to meet. We are actively looking for and seeking out new clients. We're actively looking for and seeking out consultants. I've already hired my first consultant in addition to myself, bringing on some admin staff and some support staff. So I think that for me personally, that's probably what I'm most excited about. My Family is wonderful, and they're growing. And I've got a son who graduated from high school, who is going to hit the workforce, and I have an 11-year-old as well. So there's just a lot of fun. In addition to the older two kids that are out of the house, there's just a lot of fun things to be excited about, no matter what. Yeah.
You ready for the final 3 questions?
I think so.
Ready or not? If you had one piece of advice for your 20-year-old self, what would it be?
Yes. Be present all the time. Wherever you are, be there. That was a challenge for me before the internet, right? Yeah. Being present. Yeah. That was tough for me. When I was 20-year-old, always wanted to be farther along, always wanted to be older, always wanted to be doing something else. More. And then, now the internet, and it's just you can be numb anywhere you want.
Correct. Yeah. 2 books that changed your life.
The Bible is number 1. Top. Absolutely. And continues to do so. Number 2 is a tie. So it's either Built to Sell by John Warlow or The Richest Man in Babylon by Walter Clayson, right? Walter Clayson. That one's a toss-up because Warlow's book came along when I was at a pivotal point in one of my businesses, and it really, really changed how I thought about that. Clayson's book came along when I was just beginning to think about how I was going to teach personal finance to my children. And that's one of those things where when you have to teach your kids something specific, you really have to come to grips with it yourself.
That's right.
So those are my 2, maybe 3 books.
If you were cast away on an island for a year, you can only get 3 pieces of data about your business each and every month. What 3 things must you know?
Number 1, so this business is relatively young. So right now, number 1 is what does the top of the funnel look like as far as client flow goes, right? What's our potential deal structure? Or what's our potential deal count? What's that number? What's coming into the pipeline? So that would be number 1, is just like top of the funnel. Number 2 would just be current cash position. I would always want to know my net worth, both business and personal, on a monthly basis, which we always track that. And so I think I would feel like I was lost on the desert island if I didn't have that monthly snapshot. Sometimes it's not good if you track following the market, but it's a monthly snapshot, and it's a data point that I need. And I think number 3 would be just that I would just want to be able to check in with team members, right? And understand, okay, how's it going? Where are you at? Where are you stuck? Where do you need help? And just know that they've got the support and the resources that they need.
Jeremy, I've asked you lots of questions. You could talk all day. But what's one question I did not ask?
Oh, I forgot to prepare that one. It's the famous lawyer question. What question should have I asked you? I think that one of the questions that we had talked about earlier a little bit, and I don't know that you and I got into, but I'll just answer it so you don't have to ask it. We have to play the game. Why did I leave a really nice corporate W-2 and start my own company in the middle of Iowa? And so we talked about this a little bit, but I've had a passion. So I've owned, built, and sold 4 different companies. The last 10 years, I've been in 2 roles in the 3D printing industry, and there was kind of an inflection point that came last year. But even before that, I've been thinking a lot about what does the next step look like, and getting back into entrepreneurship, back into ownership. Kind of my last corporate job, I got to be the resident entrepreneur on the team, right? Because everyone else on that team, they all went to Ivy League schools. They all had done nothing but corporate their entire careers, right? And the company I worked for, one of their core values was entrepreneurship. And so we would do global team meetings, stuff like that. And I'm like, well, so what does entrepreneurship mean to you? And we'd go around the room, talk about it. And I would say, entrepreneurship to me is gathering up 70% of a parachute, and the rest of the pieces are somewhere, and we'll put it together on the way down, right? And the cool thing about that is in the United States, you don't go splat at the bottom, right? You bounce. It might be painful, but you bounce if you don't get the parachute put together. But the challenge and I'll just say rush of being back in a spot like that, and having not only the ability to fail, but the ability to succeed and make the next 10 or 15 years a big success for others and for me. That's what's exciting. And that's what drives me.
Dude, it's fantastic, and this is probably why I get along so well.
Right?
I get been in that world and in that sales world for forever and ever, right? There's nothing more motivating than knowing you might not eat
Yep. That's right.
tomorrow. We could talk for hours. We will not. But for people that want to find you, follow you, connect with you, where can they go? What should they do?
Yeah, absolutely. ExitFactor.com is a great way to get in touch. You can also find me on LinkedIn or Facebook. I'm assuming we'll be able to put those links in the show notes. We watch all of those platforms, and that's by far the most efficient way. If you've got my cell phone number, feel free to text me or call me. Always available that way too.
Links below. Jeremy, appreciate that.
Wonderful. Thank you.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in